you've got something like an 84% chance that, boom, this happens. I promise you that this segment is going to grow your level of sophistication. It is going to increase your ability to read the markets now, and it's going to increase your ability to come up with what is likely to happen next. And you'll be right with that more often than you'll be wrong. I'm going to start off with something that I believe many of you are familiar with. And many of the technical things that we'll talk about are basic, elementary things you can find everywhere. But I promise you, we will do a deep dive the Oliver Velez way, which will bring them to be alive more than they typically are in out there in the internet. So we're going to look at them from a deeper perspective. All right. So what we're going to be covering today is what I call the bull and bear flags. Now, I decided to start off with bull and bear flags because I think that they are so important in today's market environment that you should know how to identify them. And if you know how to identify something, you should also know how to profit from what you're identifying. So we're going to talk about bull and bear flags and all of their variations. All right, so let's get going. Let's talk about the bull side of things, the buy side. All right, the bull game. Before we start trying to identify what a bull flag is, there has to be a power move, a bull move. All right. And what you see here is just basically a graphical indication of what a bull move is. It's just a strong, powerful surge to the upside. Now, in reality, guys, I'm going to draw here a little bit. In reality, this strong surge to the upside can be in the form of one solid bar move, just like you see here, or in reality, you could get a multiple bar run to the upside that represents the same thing. Both of these scenarios are bull moves. Both of them are powerful surges. Both of them count as practically the same thing. It's easier to identify the one bar solid, strong surge to the upside. It's a little more complex to identify the multiple bar surge, but I'll give you a key. There's little to no interruption in the multiple bar run to the upside. All right, there's little to no interruption. So if you get an interruption, it's brief. All right, so there's little to no interruption to the upside if you're getting the multiple bar version of the strong move to the upside. And right, the bars that make up the move are fairly solid. So it's not, so your bars are fairly solid, and we'll look at this in real life, but you'll get bars that start here and in there. That's a relatively solid bar. So the bars are fairly solid. You don't get this in the power move, where there's a big giant tail on the bar, and that bar is not considered to be solid. All right. So very easy to recognize the surge that we need, the power move we need if it's one bar. Little more complex if it's multiple bars, but just when we're considering the multiple bar surge, we want most of the bars to be solid in nature. They can have little wicks on each side of them, but we want the vast majority of the bars that make up the multiple bar version to be relatively solid. And if there are interrupts or pauses, those interrupts or pauses are very short-lived. All right. Whenever we get a bull move, either the single bar or the multiple bar run move, and I'm going to draw the other one in again, I want all of you, whenever you get a surge, I want you to break the surge up, at least mentally, into thirds. We're going to always think in thirds, or we're going to generally think in thirds. Power surge to the upside, that power surge is divided into thirds. There's a top third, there's a middle third, there's a bottom third. Even if you get the multiple bar run that represents the surge, you're going to think in thirds. Top third, middle third, bottom third. All right, always think in thirds. All right. Now, why is this important? Because what we need in order to have a flag, we need, when the stock is ready to rest, when the stock is ready to pause, if that pause happens to occur in the top third of the surge's range, of the power moves range, if the resting period, if the pausing period, if the sideways motion, if the back and fill, the consolidation period stays trapped in the upper third of that move, you've got something like an 84% chance that, boom, this happens. Now, to give you a general idea of how powerful 84% is, guys, I used to have an algorithm. I had 14 of these algorithms that I designed back in 2002, 2003. These algorithms had a 37% accuracy rate, which means that this algorithm, which traded the markets automatically without any human intervention, all right, it had a 37% accuracy rate, which means that it lost more frequently than it won. But when it won big. All right. And when it lost small. With this 37% accuracy rate, it made millions. 37%. This is something with an 84% probability. This takes that 37% and blows it out of the water. And so I want you to understand that 84% is extraordinarily powerful. This is the type of thing that you can get very wealthy based on if you can identify these things properly. So we're looking for a power surge, and every surge must and will reach a point where it needs to rest. It needs to catch its breath. It needs to pause. How the stock pauses, how your financial item pauses after a power surge is 100% the key. Does it pause in a sloppy way that breaks through the top third? Does it pause drifting down? Does it pause drifting sideways? Does it kind of pause by drifting marginally upward? These things matter. So what we're talking about now is the sideways drift, the pause that stays trapped in the upper third of the power move. Now remember, this power move, traders, can be multiple bars as well. And so if we were to draw that in, it could look something like this. Boom, boom, boom. And then and boom. All right. In this scenario that I've drawn here, you are in the top 1/3 of that multi-bar run up. Okay. Very important to understand. Okay. Now, where do you strike with this? Well, my traders are taught to strike on what we call the clearing event. And the clearing event would be a surge or so that rocks above the last 5 bars. So any move that takes out the last 5 bars this way, you don't have to go all the way here. So let's say this sideways pattern could be made out of 11 bars, but it's the last 5 bars that matters the most. So it's not the whole thing, it's the last 5 bars. If you clear the last 5 bars, boom, you're buying the break above the last 5 bars of the pause, not the last 10 bars, not the whole pause. That whole pause could be 12 bars. That whole pause could be 8 bars. That whole pause could be made up of 16 bars. But it's the last 5 bars that matter. And whatever bar clears the last 5 bars, boom, that's your buy bar. All right. I know your cats and your dogs might have jumped at that. I'm sorry about that, but I get excited with these things. Whoo! All right. All right. So there's our bull flag on the 1/3 part. But what happens, traders? What happens if you don't get the pause in the top 1/3? What if it drifts downward? You see, guys, what's important to understand is that a stock must rest after a power move. If it doesn't rest, it's going to run out of gas, and continuation of that power has low odds. In order for a bullish move to remain bullish over a period of time, it must have these resting periods. The same way, if you want your runner to be able to run multiple races and not just one race his entire career, that runner has to have resting periods between each race. All right. Otherwise, you won't get a multiple race career out of that runner. Same thing with the stock. In order for this move to continue this way, it can't just keep going without resting. Now, the rest happens in one of two ways. We talked about one way your stock can rest. It rests sideways. After a certain period of rest, as long as that rest is in the top portion, boom, that is an 84% likely result. All right, we've talked about that. But there's another way a stock can rest. It can rest this way. You see that? So I want you to think about this for a moment. Here's your bull run. Your rest is going to come this way or that way. Now, both accomplish the same thing. They allow the bulls to rest, take a pit stop, catch their breath, and move on. Boom. Boom. Now, if you look at the black resting periods, aren't they really the same thing, just at a different angle? So if I were to show you, right, let's take a look at this, guys, for a second here. What can I get? I show you this pen, right? Let's say I show you this pen right here. I show you this pen. It's horizontal. But it's the same pen if I turn it vertically, right? Vertical or horizontal or at a diagonal. So this pen, when we have, I don't know if I'm doing this from the right side, we have a surge to the upside. Your rest can be sideways or downward. Sideways or downward. But whether it's downward or sideways, it's the same. It's accomplishing exactly the same. All right? Same thing. It's giving your stock an opportunity, or it's giving your item an opportunity to rest. So when your stock is resting sideways, you need it to stay in the top third. But if it rests downward, you need it to stay in the top 50%. I'm going to repeat that. If your stock rests sideways, it needs to stay in the top 1/3, or all bets are off for an upside break. If it starts resting in a diagonal way, sideways, then it must maintain the top 50%. Otherwise, all bets are off for a nice continued bullish run to the upside. All right. Now, if you break this 50% mark, now any move up is likely to fail. All right. If you don't break the halfway mark, the move up is likely to go to new highs. You got that? This is extraordinarily powerful. There are so many market players that do not know how to judge whether a surge back to the upside is likely to fail and be for naught versus when you should bet on that surge to the upside. You want to bet with this one to the upside. Boom. But you don't want to bet with this one that is broken through the 50% mark, because that one's likely to get slammed and fail. All right? And so the thing that I think is most important to understand here is that after a power surge, the stock can rest one of two ways, but the percentages of what they give back are very different. You need this to stay in the top third, and you need this one to stay in the top 50% of the power move. Break deeply below the 50%, and now you will get moves to the upside, but those moves to the upside are likely to be failed attempts to get back, for the stock to get back on its feet. All right, we'll take a look at some a few examples with this as well. All right, guys, that's what's likely. All right, a high percentage of the time. Now, the new high here is the new high here. All right, it's not quite as high as the 84% of the sideways rest. So this one is more in the lines of closer to 70%, maybe even a little bit less, like 68, 69, but let's round up to 70. So there's a 70% chance, which again, remember I told you I had an algorithm that made $1 zillion at a 37% accuracy rate. This is a 70% accuracy rate, still very high, not as high as the sideways drift in that top third. All right. And let me explain to you why. All right. It's very simple. Okay. Both are powerful, but you need to know why this one is a tiny bit less. All right. It's a tiny bit less because of this concept right here. If the stock drops here, stock runs up, then drops here. To make a new high, my stock now has to travel, 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 bad drawing there. Travel, travel, and now make the new high. By the time it's making the new high, it has already expended energy. It's already put effort in. And by the time the new high happens, a portion of its energy has been spent. Okay? However, in this scenario, when you are making, boom, this new high, it's just beginning. You see the difference? So this new high is fresher than this new high because the run started from here versus in this case, the run is starting from here and is still fresh at the breakout point. Not so much energy has been expended to get to the breakout point. And so this follow through rate is higher than this follow through rate because of that reason. Both are great, both are powerful. Now, the way we play these two things are very different. The way my traders play these things are very different. In this scenario, in the sideways scenario, you are buying the new high break. All right. So check this out. You are buying the new high break in this scenario. Boom. Remember, 5 bars. That's your magic number. If you're clearing 5 bars, boom, you're jumping into the bar that's wiping out the last 5 bars. All right. But in this scenario, when you're drifting downward, you're not buying here. Oh no. You're buying there. You're buying the green bar that clears 1 or 2 bars before it. 5 bars here, 1 to 2 bars there. Boom. 1 to 2. All right. 2 if the bars are small, 1 if the bar is normal. So if you got a normal red and boom, green takes out, we call that a color change. Green takes out the red, boom, boom, boom. But what's the key? The key is that you must stay in, this must happen in the top 50%, not the bottom 50%. As long as this change, as long as that green surge that is now eliminating a red bar is happening in the top 50%, now you've got decent odds of getting to that new high. If you do this down there, boom, the odds are that. All right? A failed rally. This has higher odds of a continued rally. All right. Good job. Now, I know you might have some questions. I'll get to those. I just want to finish this part right here. This is not the drift sideways, which we know has to stay in the top third. This is not the drift downward, which we know has to stay in the top 50%, right? This kind of slows down the momentum, but slows down in a drifting upward way. So now we've got all three drifts or 3 pauses covered: the sideways pause, the pause that drifts downward a bit, and then the pause that drifts upward a bit. Now think of the runner really needing to rest, all right, but not getting to rest completely, this still expends some energy. This expends no energy. This expends some, but very little. And this is still expending energy a little bit. So what potentially can happen here is this. Now, this can happen and still be bullish if you don't break back below the top third. So if this drops like this, that's still okay. But if the drop breaks back through the top third of the initial power move, it's over. Now rallies will likely fail. And you got to be careful about trying to buy the move back up here, because that's your likely scenario. All right? And so and what we've done is we've simply done this. We have covered this scenario. Check it out. We've covered 3 scenarios. Scenario 1, the sideways drift that maintains the top third, the downward drift that maintains the top half, the upward drift that also maintains the top third. Okay? This must maintain the top third to stay healthy. If we break, it's over. If we break, it's over. All right? Now, this really comes in it's very handy. There's virtually not a day that goes by that I'm not in some way playing this